The Hedgeless Horseman here. It's December the 3rd, 2025. First of all, thanks to the sponsors. Let's dig in. Markets are, copper is doing well today. Silver is almost at 59. Gold is at 42, 46. So obviously, very especially, I mean, gold, extremely high prices. Well, at least if we're talking margin, of course, gold is probably going to be even higher in the future, as I mean, it basically always goes higher over time. Silver obviously broken through the $50 zone, and I mean, as many people probably know, there is, I mean, basically, I guess a big fat cup and handle. I guess maybe spot and futures are a bit different, perhaps. I mean, this is a log chart, but as you can see, it's like, you know, a cup and a handle, and it's just breaking out. I mean, the interesting thing is, of course, that as always, we're sitting here focusing on the daily movement. You know, if silver is down, you're going to see if the futures are down today, you're going to see tweets about silver being down, yada yada yada. If it's up, people are going to be, more excited, and it's like we're still talking maybe dollar moves, but when you think about it, I mean, there's a saying that the bigger the base, the higher in space, and this is a 45-year cup and handle pattern. So, I mean, if you have a base that lasted for 45 years, I mean, I have no idea where silver is gonna go, but and I don't want to throw out, I was gonna say, price guesstimates, but I think one rule of thumb is, and this doesn't make it that exciting. I think the rule of thumb is a cup and handle. You have the the height of the cup basically is the breakout, which would give it to or get it to 96. I mean, personally, I think if I had to guess, that wouldn't really be close. I mean, you can just almost look at the magnitude here, and yes, sure, it's a log scale, but still, I mean, it would be. It just feels weird where you have a base this big and this long, and the target price is well, I guess almost $100 silver. I mean, that would obviously be huge if silver went up 75% from this breakout here. But yeah, I mean, personally, I wouldn't be too surprised to see like $250 silver. I mean, the thing with silver is, in my opinion, is like it's such a small market. Such a small market. I mean, if you I mean, if you consider something that's whatever, fully valued or something, it's like, S&Ps, could that within the next 5 years go up 400%? I mean, of course it could. And the thing is, we're still thinking in today's dollars, right? I mean, if we go into some kind of AMR thing, I mean, the silver price could go to $1 million. I mean, it's like at that point, money isn't really worth anything, or the dollar isn't really. But yeah, it just feels like, I mean, this just feels like way too small of a target for a pattern this big. And again, it's not like, oh, if silver doubles, the world is gonna end because nobody can afford to build anything. I mean, that's not really. I mean, silver's impact is not that big. It's not like oil doubling, which it obviously has many times and even multiplying. But it's not like, oh, if silver goes up 100%, or 150%, the world grinds to a halt. No, I don't think so. I mean, it's not like oil where it literally. Yes, sure, silver is used in pretty much every electronic, I guess. Well, at least gold is. Um, my point is that I don't think it's going to be that much of an upheaval, and it's not a big market. So it's like, hey, throw some billions on silver, and it probably could pop quite a bit. So I don't think it's outrageous at all to be thinking about higher potential prices than this. And of course, like gold, I mean, on a long enough timeline, we're going to hit any number you can come up with. Even though silver has kind of sucked for a long time, but also it's because the supply is fixed. While most of the silver comes from, I guess, recycling and byproduct of mines. So I mean, if you have 30 porphyry mines, they're producing 90% of the new production, new silver. If silver goes up or down, doesn't matter. They're mining mining it for the copper. So as long as there's, and they're gonna be selling the silver. So I mean, as long as there's not enough demand, silver is just gonna get swamped because there's no, the primary source of silver in terms of production comes from the porphyry mines, and they're not gonna be shutting down just because silver sucks and there's no demand, right? So they're just gonna be heaving on silver. And the flip side of that, of course, is that if silver goes up in demand and the above ground float and recycling and new production can't really keep up, there's not going to be a bunch of silver mines popping up anytime soon that's going to put a dent in it. Basically, I guess that's fair to say. I don't know exactly how much silver some of these bigger porphyry mines produce, but it's like, how many silver mines do you know out there? First of all, most silver mines, they're not pure silver mines. They're 50% base metals or 50% gold and all that. So the number of ounces of actual silver in some mining operations out there, or some projects that might become mines. It's not a big deal. I don't remember what the deficit is, but I think silver's been a deficit for like 5 years, and I think it's like hundreds of millions of ounces. I might be wrong on that. Don't quote me on that. I know Shen Lin knows the numbers very well, but it's like if you bring on 5 million ounces of silver production into whatever 200 million ounces of supply shortage. How much difference is that gonna make? Not that much. Whereas like, yes, there's some commodities where you bring on one mine and it can swamp the entire the entire market basically, because you might be adding 15% of annual production, and it wasn't even in a deficit that specific metal, for example. So I have no idea where silver is going to go. I just think that it's one of those cases where it's like, as we've seen, when silver rips, it can absolutely rip. Then it can absolutely get crushed because lower demand, lower prices doesn't really mean that the supply is going away. These big porphyry mines, they'll just keep selling silver. They don't stop production. They don't shut down any mines, as we've seen. Take nickel, for example, which have gone down quite a bit the last couple of years. Mines shut down, and these big porphyry mines, they don't really mine nickel. So primary nickel mines shut down, and then sooner or later you get a balance in the market and the price bottoms, and then maybe demand goes up, and it takes some time to put those nickel mines back into production, so you have a bull until then, and etc. But it's exciting stuff. But my portfolio is not centered. It might take a long time, who knows? Maybe we could hit $100 silver within 6 months. I wouldn't be too surprised by that either. But you never know. So my entire portfolio is not built just based on what silver is doing. Because yes, I mean, if the silver price is here, gold price equivalent. Well, we can actually just add gold. I mean, as you see, silver price is where is it? Here. This was the all-time high here. This was the all-time high for gold back then, and here is gold now. So it's, historically speaking, I mean, big picture, gold has had a much more impressive run, and it's very high. And I mean, silver juniors typically trade with a speculative premium, as I like to call it. Now it kind of makes sense, but the funny thing is, I don't think that silver juniors really are. I don't think they're really pricing in that much of a premium anymore. I mean, back here when silver hit 29, I think First Majestic and other producers, they were probably pricing in like $36 silver, and maybe the producers are pricing in higher silver prices in the near term, but they are not really pricing in $75 silver, $100 silver, especially not the juniors. So same with gold. I still very much favor the junior space compared to the producers. But of course, if silver rips, the producers, the Heclas, the First Majestics, the Fortunas, etc., they get direct benefit from it, because all of a sudden they get paid more for their production than they were yesterday. But I do think I think the sweet spot is still advanced juniors, advanced explorers, developers, personally, or anyone that really has growth. I mean, Sierra Madre, for example, that's a growth story. They have some production. They're not really cheap based on the production. But the thing with that one is that where's the growth going to come from? Well, I mean, they're very excited about exploration potential, and they're going to be steadily growing production. So it's not cheap at face value, maybe when you look at what they're making at today's production profile. But even if silver stayed flat and they just could deliver ramp up production, and the exploration efforts bear fruit, I mean, that could make it look really cheap. So again, without a helping silver price, whereas like Heclas and stuff like that, I mean, if silver doesn't really go anywhere, most of those companies shouldn't really go higher. I like to stack the odds in my favor, and of course everything is a double-edged sword, meaning that if you're betting on the ones that get direct benefit and are basically only tied to the silver price, the producers, if silver goes up, they'll go up. If silver goes down, they'll go down. But if you have cases where you're mostly betting on the fundamentals of the company, and you think that, well, in 2 years it's going to be worth more than today, if silver goes up as well, I mean, that's just going to be even better, right? Because the company will have created value. Let's say they find 50 million ounces of silver, and all of a sudden silver is trading at $100, which might make today's prices look really cheap, and maybe they're closer to some kind of production by then. Anyway, I just looked also at the third-party validated example portfolio. I think this was created 2023 June. So yeah, like 2.5 years, and the average, unfortunately, Contact Gold got capped because they got acquired. So I mean, this portfolio doesn't assume any reinvestment or something. It started off as an equally weighted portfolio and was not supposed to do any form of trading. But the idea behind it was like, hey, the entire sector is cheap right now. Let's see what could happen if you put together 20 stocks with third-party validation, either by smart money or major miners, etc. Basically, that ensures that you're not a total lunatic, not a total lunatic gambler for betting on them because somebody that knows more about mining exploration and the value creation in the mining space is already betting on them. So obviously, I mean, 2.5 years without any trading, equally weighted, 228%, with this being capped. I mean, if Contact Gold didn't get acquired, I mean, nobody knows exactly what it could be trading it, but I would assume more than, 3.5 cents. So yeah, I think it's just a good reminder. I mean, I wouldn't be surprised. This might actually have beaten the HODL folios as well over this period of time, and I mean that's something I think worth thinking about. This is super simple strategy. Super simple strategy. You think they were cheap. You have smart people who are betting on it, etc., and you do absolutely no trading. If somebody who didn't have any conviction or whatever got a portfolio, 20 names, the same names, equally weighted, I would bet it wouldn't have had, and they were free to trade, but let's say they could only trade between these stores. I wouldn't be surprised. I mean, what does typically happen? I mean, for myself going back, I usually took profits way too soon. I looked at, what something is up maybe in absolute terms, and it's like, well, then I'm not gonna, I'm up 50%, time to take profits, or up 100%, sell half, or anything like that, or something like that. Then would look totally different, of course. I mean, if this was, it would be fun to, just show the, waiting if you just left this portfolio. Obviously, montage would be a very big position because it started off as a 5% position and went up almost 13.5 times. And also A-Mark and Snowline. Wasn't Magna in it? Yeah, Magna as well. So I mean, it would be a much more concentrated position, and that kind of also goes back to the point where, mentally, can you cope with a concentrated position? Let's say the top 4 performers here might account for 60% of the position. That's not something many people might be able to cope with, so they would be, what's the saying? Cutting the flowers to water the weeds, or whatever it's called. I just think it's just a good, again, reminder. It's like no technical analysis behind this, no trading at all. Just a super simple strategy. They look cheap at the time, or cheap, low priced. I mean, Irving, for example, didn't have a resource at the time, so it's like, is that cheap? Well, they had a lot of exploration projects, third-party validation. Midland Exploration, I honestly, I don't even remember what they really do. I just know that I'm pretty sure they had some kind of major involved partnered with or something like that. So it's like, okay, if it's good for whoever the major is, it's you're not buying something that has no chance, at least. Yeah, so imagine that. I mean, this probably outperformed 90+% of active junior investors over the last 2.5 years. Because yes, a lot of people had, let's say, good runs, or part of their portfolio had good runs, or something like that. I mean, this year a lot of people had really good, let's say, returns on paper, but that's just 1 year. Because this was 2023, so imagine this was like 1.5 years before the bear market ended. So it's not like this was from the bottom or anything like that. This was like half of the time, or 2/3 of the time, this portfolio spent in a bear market. And it's still, now, since we've entered a bull market, it did 228%, but it's not just from being apart from the bull market. So it's like, again, something to think about. that in my opinion, like I can just go back to myself. My goal, or I don't know if it's been a goal, but a natural evolution has been that my investing strategy is kind of getting more and more simple in a sense. I want no brainers, I want cheap, and we're talking the bigger positions. I have quite a few high risk, high reward juniors as well, but they're typically at 1% positions. Nowadays, I used to take much larger positions, but nowadays it's like the ones where significant success is much more an if than a when. I'll go lower in those cases. And as I've talked about a bunch of times, why is one reason behind that is you need multi-baggers in high risk, high reward cases. If you don't let high risk, high reward cases become multi-baggers, you're running a high risk, low reward strategy. Probably even negative expected return actually. So you can't start off with too big of a position. Because if you start off with too big a position, you're going to start sweating as soon as that stock is up 50 or 100%. And if you sell that, or a meaningful amount, or even sell everything after a double, it's never going to pay for the other losers that you have at equal sized starting positions. Because a lot of them are going to go down 50, 60, 70% if assuming they miss. Anyway, let's look at some news. Altamira Gold welcomes leading authority on porphyry deposits, Dr. Richard Silito. So I mean, he's a legendary geologist. Basically, I guess not if not the one of the fathers of porphyry deposits. Yeah, recognized as one of the world's leading authorities on porphyry and epithet. So you can imagine, I'm assuming his time is worth a lot. He has worked with mining companies, international agencies, and government groups in over 100 countries. His field-based approach to deposit modeling has contributed to the discovery and advancement of major copper and precious metal deposits around the world. So a lot of people might say, well, these are not assay results. It's not a resource update. It's not this or that. But I would emphasize the signal value. I mean, this guy probably has offers or possible commitments coming out of his ear, given that copper and porphyry is very hot today, and he knows more about porphyries than almost any living human. So just the fact that he's cares enough to come on as a technical advisor for a quote small junior like Altamira Gold, which, as people who follow the story knows, has a porphyry district in Brazil and already made like 3 discoveries. Yes, what I'm trying to say is there's probably something here in a sense. Yes, I do think Altamira has major company making potential, and I think this just again going back to the third party validated. Is it crazy to say there's a lot of potential within Altamira's projects? Well, I don't think Dick Silito would come on board as a technical advisor, put his name out there, if he didn't think that, hey, this could become something really special, and I'm okay spending time on it, I'm okay being connected to it, etc., etc. So yeah, probably, which is not totally surprising, flies over the head of most people, but some of this like signal value, such as this, I think it's worth a lot more than most of us think in a sense. It basically says, yes, the porphyry potential is significant and real. And for a 77 million market cap junior who has 2 outdated resource estimates totaling 1.4 million ounces with 3 porphyry discoveries out of 11 so far. Yeah, I mean it's evident. I mean this I like no-brainers like this where we know what they have in the ground already. We know the price we're paying. We know that they made discoveries. We know that Silito is now, is okay being coming on as a technical advisor. So at 77 million CAD, with I think they have like 10 million in cash. Is that a good risk reward bet? It's again, you can never say anything is a guaranteed success. I mean that's not how investing is. It's just probabilities. But if we look at the picture that's been painted, and in terms of all the targets, all the discoveries, and the first deep hole at Maria Bonita, for example, could we see is there a realistic scenario in the future where this is 3, 4, 5 million ounces plus or something like that? I mean, it could theoretically obviously go beyond that given the amount of targets, but not torn away too much. It's like, yeah, I would think so. I guess this kind of confirms that even more, that's the potential, major company making potential. And we know what we're paying for everything. 77 million CAD. I mean, what's that actually pricing in? What are we paying for? And what could be there, and what could that be worth? What is it worth what they already have? I think it's cheap based on what's already known. I think it's very cheap relative what this could become. So I just think it's a highly asymmetrical risk reward, where it's hard to see that what they already know is going to be worth less than the current market cap, and what we don't know yet has still the potential for it to become something major. That's what I would call an asymmetric bet. Low chance of, as I said, overpaying for what's already there, and then if that's the case, everything else becomes free optionality to the upside. And with Richard getting on board here, I think he confirms that there's significant upside, which you would then, if this guesstimate is correct, would be free optionality. That's a pretty good bet. Headwater Gold announced Headwater Gold and Centerra Gold signs US $25 million earning agreement to explore the Crane Creek Gold Project in Idaho. Definite earning with Centerra. So this is the third larger company that is now has signed earning agreement with Headwater. And which is not too surprising reaction today. I mean, it peaked here to, what was it, 65 cents today. Well, there's been some volume today, at least 43.7, but it's like 5.4%. So what's that, like a 2.5 million market cap change, perhaps? The thing with, and this brings up, I think this is a good example of that. Going back to the video I did about 3 spots, let's say, to take it, how you can take advantage of the market. Now actually I don't remember them all. One was optionality, one was I think multi-asset, and maybe one was actually just patience. What I kept saying, and as you probably can see in a lot of examples, where the market can only focus on one thing at one time. So I mean, if you had just a junior that only had Crane Creek and announced a 75 million agreement with Altamira Gold. I mean, I think that would be significant, of course. But when you bundle all these agreements they have they updated it? No. So they have Centerra with Oceana Gold with TJ, Oceana Gold with Hot Creek, Oceana Gold with J Creek, Newmont at Lodestar, Newmont at Spring Peak, and Crane Creek now with Centerra. And they have Centerra and Newmont as shareholders, high insider ownership, etc., etc. Already discovered at Spring Peak, where Newmont has decided to earn into phase 2. So if you, I mean, obviously, we don't know exactly what threshold Newmont has, but I would think, let's say, $3 billion in terms of, you know, MPV or something. I mean, even that is kind of small, I guess, for Newmont, but hey, let's stick with that. 3 billion, and for Oceana Gold, I don't know what Oceana Gold's. $8 billion. I actually thought it would be bigger by now, but let's say 1 billion, whatever. I mean, that's still meaningful. That's still meaningful. So it's like, let's say a 3, and sure, why not? We'll combine this to 3 billion. Newmont still sees $3 billion potential here. Let's say Oceana sees $1 billion potential at each of these projects, and let's say Centerra sees $1 billion. I mean, again, that's like, of course, it goes without saying, if you have a company at a certain size, they need to see some kind of threshold potential for them to even be interested in the first place, to even do the paperwork. It's got to be worth it to them. They got to see something. Yes, we think there is a shot, not a guarantee, a shot at something that could be move the needle for us, be meaningful for us, and we're seeing that in the geology, in the footprint, whatever, you know, how high grade these can be, yada yada yada. So now we're up to Crane Creek, 1, 2, 3, 4. Let's count this different or as separate because they're you know, Newmont is so big. So 1, 2, 3, 4, 5, 6. And the market cap of Headwater is 43, and then they have cash, and then they have management fees. So they're actually earning some money while getting fully funded in terms of exploration. So, I mean, how much per project is priced in? Right? That's not a lot. 44. Let's just take the earning agreements. 44 divided by 6. That's 7.3 million CAD per project, per earning. 7.3. Even if you assume that we're capping the value of each project at 1 billion, and Headwater would get 25% interest. They would have NSRs on some. Did they include NSRs here? Okay, maybe not NSR in this one, but this only brings them up to 70, so that's 30. But let's keep it simple. So let's say 25 direct interest in case of success, meaning 1 billion plus. So that's 7.3 divided by 250 million. That's 2.93% chance priced in. That's not discounted for time or anything like that. But still, you know, what kind of success chance do you think these major mining companies would need to see to even bother doing the paperwork, agreeing to spend the money, diverting time and folks? I would say it's probably above 2.93% chance of success. If it's 10, which sounds a lot more reasonable at least, then Headwater is really undervalued just based on the sum of its parts. But that's the beauty of a tunnel vision Mr. Market, because you don't really pay up for the extra shots beyond whatever it is. And it didn't move much on this news, didn't move that much on the Oceana news either. Well, maybe some actually, but I think it mostly moved actually on the Rick Ruland and Jeff Phillips investment, which kind of goes show that, it's more narrative driven in a sense, because Rick Rule and Jeff Phillips getting in does not increase the value or doesn't make the geology better, doesn't make the drill hit better, and they're fully funded, they're fully carried. So it's like it's good to have some money because they have some 100% owned projects as well. But my point is that seems almost like that was what moved the price the most. Having third-party validation, authorities that people look up to and like to follow. But is that efficient? Is that an efficient market? That two investors suggesting it's cheap by investing in it makes the price go up. Now that's more, retail market kinda, believing the obvious a bit, I guess. And it feels comfortable, of course, because Rick Rule is a legend and Jeff Phillips is kind of known as well. Because it does go back to third-party validation where, if they think it's a good investment, how bad can it be? So there's merit to it, absolutely. But it's still dislocated in a sense where they're investing because value creation done by Headwater, which was not recognized by the market, and they recognize it, and then that kind of makes other people recognize it. And the market still can't really factor in more than, one project. Is Headwater expensive if they only had Spring Peak Lodestar, the Spring Peak Lodestar discovery with a major earning by Newmont at 43 million, and subtract some cash? I wouldn't call that expensive, because we know what Newmont is after. They're looking for multi-billion-dollar projects. And 43 million CAD minus cash doesn't really price in a high success of that. So if it ends up being a Newmont size price, one would argue that Headwater is going to be worth a lot more, or 25 plus NSRs is going to be worth a lot more than 43 million CAD. So it's just one of those things that chronically show up in the market, and it's up to whatever, because at face value, what exactly changed? They announced that they're going to be, they announced yet another project that's another can, which is going to get kicked with the help of Centerra. So that's risk to the upside. That's, the fuse is lit in a say. Because before this, maybe, they might be drilling Crane Creek 100% owned in 4 years or something like that. So it's like you'll still have to wait 4 years to kick that can, which you could buy today without paying up much. But all of a sudden this got live, and is yet another risk to the upside. And of course, like any other multi-asset unit, 43 million CAD, you only need one success. And this activated another avenue, another head of the Hydra, basically. That's gonna have its can kicked. You never know. Maybe Crane Creek is the only target to actually deliver at the end of the day. It can be zero, it can be up to all of them that can deliver. My point is, the beauty is, for some, let's say, common sense investor, is the fact that you see examples of this where the market is focusing on one thing and the company keeps adding value, but it's peripheral value in the sense that it's not tied directly to success at the flagship project. So the market discounts it. But in reality, this has impact because they will be drill testing it and have a partner that could fund it, and also you have the target validated by a third party. So you know the target is good, you know it's going to get tested, and you know it could theoretically be advanced quite quickly without any dilution as well. That has some value, right? And what does it do for the case overall? It de-risks it because there's more risks to the upside. So now more projects have to fail within the next 3 years, or over I guess the lifetime of the company for this to be a failure. But it also adds up and fast paces the potential for significant success. And if you're not really paying up for it, it means that you get more imminent risk to the upside and more imminent, de-risking in a sense. And it gets the risk because it is a major company that's saying this looks good. So it might not sound like much, and again, if you look at the market, that's the thing. When you look at the market, it's the same with a bear market, which I like to call, you can invest like an insider, because you can see good news come out and the market doesn't reprice it. So you can pay the same price as if the news didn't happen, or you didn't pay up. I mean, the whole idea of inside information, for example, is that, well, we know something good is going to happen, but the market doesn't, so I can buy it now, and then it's going to get repriced when this new reality is out. In the bear market, we got new realities, but we didn't get corresponding price. So there's no difference, really. It's the same. It has, in practice, it's the same as being an insider across the whole sector, basically. That's why I kept hammering tables like this is obviously the best time to buy. You're never going to see better risk reward than this. This is a twist to that. It's not because the sentiment is necessarily that bad. It's because this is a peripheral add-on value, and the market only really discounts one thing at a time. Again, going back to the Lundins, they have a habit of spinning out as soon as they find have something of value, sometimes of significant value, that's not really appreciated by the market. When they spin out, if they have two good projects, NGX and Philo, when they did the spin out, it forces the market to price both of the assets individually. Now we can't ignore it. And basically, if I remember correctly, NGX was the first. Philo got spun out, I think, and basically NGX share price didn't move that much, but NGX reached a very high market cap. Maybe it was even on par with NGX. So you basically doubled your money from doing nothing except spinning out and forcing the market to actually price in more than one thing, because all of a sudden each company had one flagship project. It wasn't a company with two flagship projects, but the market was only pricing in one of them. So it has real effect, and that's thanks to the market being like it is. So I mean, the point is that you can either be, a victim and not think for yourself and look at the, it wasn't a big deal because the market didn't price it high. But that's that's the irony of it all. It's that stuff. I mean, the tunnel vision. What the market gets wrong from psychological reasons, those are the easiest ones to actually take advantage of. And at face value, did value change? Well, this is all of a sudden not a discovery. It doesn't mean that. It's not like banked value went up. but the risk reward changed, especially if the price didn't change much. Yeah, so I mean, Headwater, I mean, compared to most early stage exploration, or I mean, they even have a discovery, this is one very diversified grassroots explorer that has literally could be working 6 projects without doing a race because they're fully carried by 3 different majors. And also, if we go back to management alpha, what can be conclude about Headwater today that, let's say, you didn't conclude it at the IPO before they had any earnings? Now, if you look, I wrote this in the forum, I doubt there is a junior out there that has generated as many different targets and projects that had this many larger mining companies get interested. So, I mean, their Headwater's ability to generate high quality projects statistically is becoming absurd. Vast majority of juniors out there will never generate one target that gets interest from any major. Headwater has been able to do it 6 times. I mean, even more if you count Midas, for example. Now it's crazy. So what can you say? What's been the trend of Headwater? Surprising to the upside, basically. 6 projects getting earning deals. 6 projects generated by the management team in Headwater. 6 projects that will get tested. And you need to get one right. And there's a possibility that it's going to be up to 6 or more because they have even more projects. Think about that. I mean, the more time you give they've already shown that without really much money, just the management skills, they've been able to identify and stake projects that majors later going to come in and say, hey, we see $1 billion potential here, you're right, let's do an earning deal. That's nothing to sneeze at. It's surreal. But at the same time, there's not a lot of, because they have kept it so tight, the share registry. Insiders, they only almost let in, Rick Rule and Jeff Phillips, etc., high net worth individuals. There's not a bunch of brokers in here. There's not a bunch of broker warrants. It's not a bunch of, a bunch of newsletter promoters that are sitting with, a ton of warrants, etc. So it's a very quiet story, because this is evidently one of the absolute highest quality grassroots explorers in the entire space, and almost nobody cares, for a select few. I mean, this has been in the HODL follows, same with most new quest companies for a long time, and I don't see any reason to. I mean, I've talked about grassroots needs to be really good nowadays, because still bank success, advanced success, or banked ounces, etc., are still selling very cheaply compared to the current price of gold, for example, or silver. But this is just exceptional. I mean, yeah, go to a random junior early stage explorer. You won't find a slide like this, not even close. Another one, I'm not sure actually if Mawson Finland, have they updated their website? I don't remember if it looked like this. Anyway, the interesting thing is that for the people who, I mean, this First Nordic, Mawson, for those who know, they are set to merge, and the vote is set to be, I thought it was December 6th. Maybe they changed that or I got the wrong date. That's tomorrow. Assuming things goes as planned, the merger vote goes tomorrow for Mawson. And I mean, this has been one of the most boring companies over the last 2 months, basically since when did they announce that? They announced it September. So half of September gone, October gone, November gone, now we're into December. Without either company putting out any news really, just preparing basically for a merger. And that's great. I mean, you really do want, again, going back to the patience arbitrage, let's say. Oh, there's no news out. Oh, what a boring story. It's like, I bet people have forgotten the fact that they have raised $80 million. First Nordic raised $80 million. And Darren Morecambe and company got in. And there's a bunch of, I mean, I don't know exactly who got in with him, but Darren Morecambe has a history of making, for mining 2 billion, Southern Cross 2 billion. The merged entity, I think, is around 340-50 million now with 80 million in cash, maybe more than that actually. Enterprise value is quite low, and yeah, I mean, why would they raise 80 million? I mean, I don't think it's a stretch to say that, okay, we'll raise 80 million because we want to get a certain project. We want to try to get a certain project. I don't think that's a stretch at all. Otherwise, it's like, look at, Rajapalot in Finland and look at the gold line. It's like, is there immediate need for 80 million there? I mean, there's a shit ton of targets in the gold line, and they have the AIDA discovery already. Still, it's like, that's a big race. You can do a lot with 20 million if you just plan on drilling. So I mean, that's obviously what I'm hopeful for. It's gonna happen. So yeah, I mean, I think this could become one of those cases where I think the merged entity would be super cheap. They would be super cashed up, and if things go well, I think they're gonna at least try to consolidate in Sweden, and then it's kind of game on. Those are advanced ounces. So yeah, who knows? I mean, fingers crossed that this merger goes through, and that kind of paves the way in a sense, because it's unmistakably that they haven't really put out any news. So I would argue that, well, that's probably not to rock the boat until the merger is complete. And then they can put out news, because then there's no strategic reasons from a corporate level to do anything, because now it's one and the same. Yeah, the Headwater. Homerun has put out a lot of news. They put out, I think I talked about this actually, but they put out a bunch more news actually. So the financing conditional approval, then they put out the first installation of the hub energy management system, then they put out listing its shares on Tradegate exchange in Germany, making it easier for Europeans to invest, and maybe I've heard that Europeans are probably more interested in green technology, let's say, than maybe Canadians. Then they announced Homerun Resources executes NRL Enduring Thermal Energy Storage Global Intellectual Property Agreement, including new patent application. I mean, I think the endurance system is really interesting. Because it's kind of, green battery. I mean, it seems that we know, I mean, the lesson maybe from Spain, for example, when there was a blackout, and we've heard about, it wasn't too long ago when there were power grid failures, I think, in Texas, etc. So the battery side of things seems to be a big thing, and I mean, you probably read articles now and then where, people have wind power or something like that. Obviously, wind and solar is like, okay, the sun doesn't shine all the time and the wind doesn't blow all the time. And sometimes when the wind is really blowing and the sun is really shining, all those installations generate a ton of electricity, but oversupply it, so people don't get anything for it, and then it's kind of spent, in a sense. Because I guess, the battery technology is not good enough. So that's what I've heard. I think even Elon Musk has said that it's, the next the real revolution is going to come from when the world fixes or sorts out the battery or electricity storage hurdle. Because then, I mean, if you have 7 days of wind and sun, you might generate a lot, and if you can store that energy, let's say the next 7 days the wind doesn't blow. I mean, there's a Dunkelflut, I think it's called in German, where the sun doesn't shine and the wind doesn't blow. All of a sudden you have no electricity. But if you had electricity saved up, you can obviously flatten the, it wouldn't be as volatile. Power is super cheap one week, then it's super expensive the next week, and all that. So it makes the whole thing a lot more efficient, right? I mean, if you can, I don't know what percentage of wind and solar you actually can efficiently use nowadays, but I'm just gonna make up a number. If you could go from like 30% to 60% or something like that, I mean, obviously that's huge. And it's, silica sand based and all that, and I think it also purifies the silica at the same time, and it's green because it's basically sand you're heating up. And it's in cooperation with U.S. Department of Energy's National Renewable Energy Laboratory, NREL. So I mean, that's obviously a serious player. Then they announced Homerun Resources announces engagement of Jerry Shopik as corporate development advisor for strategic commercialization of the enduring long-duration energy storage system integrated with the Hub AI energy management platform. Again, I'm not a expert on I'm not an expert on silica, I'm not an expert on AI, I'm not an expert on energy storage, etc., etc. But I don't think I need to be. I mean, I know what the market cap is for Homerun. Tailwind seems to be towards solar, and energy storage seems to be a big, potentially big thing. And they have some of the highest purity silica in the world, which is used to a lot of stuff. And I mean, they have their femtosecond laser initiative. It's basically almost like a, I don't know if I could call it high risk, high reward. Maybe one could, I mean, to be safe, maybe one could look at it that way. But I just see basically as the foundation being they have very high purity silica that should be able to get monetized. I have a hard time seeing that their asset, if just almost commodity form, maybe with some treatment, etc., where that's not worth something, where they can't make money on that. Then all the verticals kind of becomes like exploration targets. I don't know which vertical is gonna pay off. I don't know how big the payoff is gonna be for any vertical, if any. But I know what I'm paying for it, and I think, again, given the macro tailwinds and all that, it could be a big thing. So I mean, things have been moving a lot slower than I thought, but now obviously with the financing out of the way, I mean, they've just basically come out with a bunch of news, and that's what I remember discussing Homerun before, where they put out news, and the market didn't really care. So you have this almost robotic downtrend, Well, that news, if nobody cares right now about that news, if that news is in fact, impactful, that's going to lead to even more impactful news, let's say. I mean, let's say they announce an MOU and it's like, oh, the market doesn't care. Okay, it's not cemented, it's potential. And at the time, the market doesn't give a shit about potential. Same with, basically the bear market in the junior space. So you get nothing for highlighting a nice looking target or something like that. But okay, you might not care about it now, but if that, let's say, news release with an MOU means that, well, there's 25% chance that that's going to lead to something and it's going to be worth 50 million per vertical. Now I'm just making up a number here, obviously. So if you don't care about, oh, it's only 25%, 75% chance it's not going to amount to anything, yada yada. But if you have, 4 verticals, it's like, okay, on average, one is going to lead to something impactful. And if it's just, an additional 50 million in value, I mean, that's almost a double from whatever the price was. So, as always, I'm not in the habit of predicting. I don't think a good case you shouldn't need to be exactly right, if you know what I mean. I shouldn't need accuracy. It's, for me, it's enough in home run to see that, hey, I don't know if I'm gonna make money on home run, but to me it looks like there's potential that one or more things can go really right, and in those case scenarios, I think this could look really cheap. So my prediction is basically either I'm going to lose money in home run, or maybe I'll make a lot of money in home run over the next 3 years. Maybe they'll have a glass plant up and running. Maybe this endurance system is going to be, a really big thing. And as some pointed out, there's a company called Rando, which is worth $500 million USD, and this energy system appears to be superior to theirs, and that's just from one vertical. Now, is that a guarantee? Should it mean that, well, and the endurance system therefore is worth $1 billion? No, I don't know. I mean, it still has to be commercialized, and I don't know exactly how much, since there's partners, etc. involved, how much is that actually going to benefit home run? Who knows? Maybe the endurance system is going to be a big friggin' deal in the future, but it comes with time. And the only thing, again, I know that it's not priced in like it's a big deal. So I don't even need to be right on any specific vertical, basically. But hey, if you have, Department of Defense, etc., or energy involved, it's like, it's probably for a good reason, and it kind of, I can see it be, if it's worth their time, it's probably worth home run's time. So it's probably nothing to sneeze at, even though there's no guarantee it's gonna amount to significant commercial value and all that. FireFox. This one is I would, again, going back to how the market operates, or if you can understand what the market is doing, it gets easier to not get, let's say, take it personal, plus you can then start to take potential advantage of the market. So same thing happened with Altamira, kinda. Altamira went down to 20 cents not too long ago. Okay, why was that? That was because warrants expired on November 5th, I think, at 20 cents. Before that, they made 1 or 2 discoveries, deep hole at Maria Bonita. Things were getting better and better fundamentally. The blue sky was increasing. The blue sky was getting de-risked, and still the price trended down. Why? Because there were a bunch of warrants here. If there were no warrants, you can be 99.9% sure that Altamira would not be trading at 20 cents at that very day that the warrants expired. that's the kind of similar thing. Wait, with FireFox. So the free shares from the placement, which saw John Robin. I mean, basically, FireFox is a discovery group company. It's within that fold, kind of. I don't think Carl, would mind describing it as such. So you get discovery group people involved, including John Robbins, who took down quite a bit of the placement, if I'm not mistaken. But other people were participating as well, and there were full warrants. And the shares came free trading November 30th, and the price people paid were 40. So then it opens up the idea that's like, okay, anybody who participated in the placement can sell down to 40 cents and they got their money back. If higher than 40 cents, they made some money. And they still have the warrant, which is, optionality basically. So you get a quote free, if you sold at 40 cents, you have a free option on FireFox via the warrant. That's, I'm assuming it's like 2 years runtime or something. That is very appealing to a lot of people because it's kind of risk-free upside. Now you couldn't, know that you were going to be able to get out at 40 cents or higher, of course. But you can understand why FireFox magically touches 40 cents, magically at around the time that people who bought 40 at 40 cents can sell their shares if they want to. And you see it's like, red, 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 red. Has the gold price gone like that? No. So it's like a anchor. And why is that? That's because human nature, I guess. Just because how, financings, placings works, etc. So, if not for that, it wouldn't be trading at exactly 40 cents exactly right now, I don't think. Then, of course, that opens up an interesting scenario where it's like in Altamira's case, for example, I exercised my warrants in the nick of time at 20 cents, even though the stock was at 20 cents. So I could buy it in the open market for pretty much the same price. But at the time, I mean, I think it got so cheap. There's like, well, at the time I don't care. Maybe I have a bit too much Altamira because I exercised all those warrants. And then, of course, it started to go up because I thought it was a ridiculous price. Now, FireFox is going to be, doing some drilling exploration. They still have an earning with Agnico Eagle, for example. They still have Mustajärvi, which is, what is it? They don't have a resource, but let's say they have like 500,000 ounces. So, the price is where it is right now because the shares came free trading and were priced at 40 cents. Okay, now, for example, here, now it's below 40 cents. So that means, if we're assuming there's somebody with warrant selling, it's like, okay, they're okay taking a small loss because they, keep upside exposure via the warrants. But these are cases where one can start thinking, like, okay, I know why people are saying. I know why. I can understand why it went down to 40 cents. I can understand why somebody sells it at 38.5 cents. The question is, of course, hindsight doesn't really matter. Only thing we know at any point in time is price. And then let's say you know FireFox and you're comfortable with whatever, and you think that, well, okay, I understand why people are selling and taking it down here, and you say to yourself, it's not efficiently priced. There's no reason for it to be at 38.5 cents, for example, now, but I understand why it happened. So now the question is then, has the market offered up an opportunity? have the sellers, thanks to them having warrants and being happy with just keeping warrants, they might be okay selling at whatever, not whatever price, but you get my point, because like they're still kind of long the stock even if they sell down here. Now I gotta be honest, I'm getting somewhat tempted. Yeah, I mean, unfortunately, I don't have much dry powder now anyway. But just not investing advice, but like something to think about. Where it's like, are there scenarios where this price is gonna look cheap in the future? And then you can go back to the bear and bull markets. Is it good or bad that this is happening? If FireFox trades at $2 in 2 years and you bought it at 37 cents, you would be happy, right? If you didn't buy but you held, then it doesn't really matter, assuming now it's going to trade at $2 in 2 years. If you bought now and sells off even more, you're going to lose more. So, it's what's your case for FireFox? What do you think the fundamentals dictate? If you look at the next 10 to 20 news releases, what price do you think it might be trading at? Is the risk to the upside at 37? Is it more to the upside than it was at 60 or at 70, for example? Has the case changed at all fundamentally from 70 cents middle of November to 38.5 cents early December? If you think nothing has changed, obviously the risk reward has just gone exponential. If you have a case where it's like this is worth $1 or something, now there's like 200% upside, whereas from 70 cents it's less than, let's say, 40% upside. Everyone has to make their own conclusion and come up with their case, etc. My point is that almost everyone hates this kind of stuff happening, and yes, I mean that's why people don't like warrants and not, let's say, tight share structures. I mean, this has been getting tighter since they have rolled back their shares and got new investors. I don't think John Robbins is selling, let's put it like that. But you have to, this is where we, again, in my opinion, this like, I like volatility. I sometimes like stuff like this as well, where it's like you get prices that you shouldn't be able to get, but you get them because someone feels forced to do something, or someone just wants to ride a warrant, so they'll just sell. It's like they don't really care. They don't have a case for it. They know they get protected if things go really well. But if you have, let's say, you have a better understanding of the case, and you're like, okay, this is absolutely ridiculous all of a sudden. Maybe the risk reward has gone exponential, and maybe I'll take my 2% position to 6% or whatever. Again, just making up an example. The more times you can kind of outthink the market and take advantage of the technicalities of how a market operates and how financing and placements and warrants, etc. operates, I mean, that's how you also boost returns, obviously. Blackrock Silver announces final assays from Eastern Expansion Drill Program at Tonopah West. At least 3 mineralized northwest-oriented structures have been identified within the 1.2 kilometer Eastern Expansion trend running parallel to the Pittsburgh Monarch Fault that suggests a series of footwall faults placed as opposed to a singular east-west structure. Hole 173 cut 0.92 meters of 2.1 kilograms of silver. And a separate zone 1 meter of half a kilogram of silver equivalent. Oh yes, a silver equivalent. But most of it is, yeah, like always, precious metal. So 1.1 kilogram silver, 8.79 grams per ton gold. I mean, bonanza stuff. Uh, 200, almost 300 AG equivalent grams per ton, over 6.4 meters, including almost half a meter of 3.8 kilograms silver equivalent. Results from the company's drill program targeting expansion potential across 1 kilometer trend of vein core between DPB and Northwest Step-Up Resources areas, and the Eastern Expansion Program will incorporate into an updated mineral resource estimate and preliminary economic assessment on Tonopah West, estimated to be completed in February. I mean, what I and here you have some comments by Andrew Pollard, CEO. Whereas we set out to target a single east-west mineralized structure, drilling from our Eastern Expansion Program has defined at least 3 distinct parallel mineralized zones oriented northwest. These structures appear to be splays of the Pittsburgh Monarch fault system. Each of these zones has intersected shallow, high-grade, and thick mineralization, indicating significant potential for further expansion in the area. So it sounds like, okay, we're hitting stuff where we hope to hit, and with this new information, we think, the blue skies has increased a bit as well. And obviously some of those kilogram hits are really good. I mean, what's the thing with Blackrock Silver? I mean, it's one of, and that's the beauty, I guess, of silver juniors. There's not many silver juniors, and if you look at, okay, how many silver juniors are in Nevada with a high grade resource, and not even base metals, but silver and gold, that list is very, very short. So I mean, the PA they have, and they'll be doing another one, was really, I mean, yes, a PA is typically over optimistic, but still, with these grades, it looks like Tonopah is a project that could work at much lower gold and silver prices, and should be, or could be, making a lot of money at today's silver prices, and it looks like there's even more. I mean, I recently talked to someone about low sulfidation systems, where it's like, they typically just keep going. I mean, you're gonna find more and more, but they're somewhat expensive to drill out the whole thing, especially from surface. But there's, Mexican mining areas where it's like, people have been mining there for 200-300 years. Sure, small scale and all that, but I mean, it's the same for Sierra Madre, for example. There's countless veins that have not yet been explored. So once, they get running, you have no idea how long there could be modern mining there. So that's what I kind of like with, Blackrock Silver. It's simply not many of these high-grade silver gold deposits around, and it's in Nevada. And I don't know. I'm not the biggest TA guy, but like, to me, it looked like this could kind of be a bull flag basically, and it's starting to go up again. So, fast forward to an updated MRE, updated PEA, and it's getting more and more, advanced and all that, closer to, theoretical production. And, if silver is gonna rip through 50, I mean, yeah, I think Blackrock could do well. Would I be super surprised if Blackrock one day, traded for $1 billion? I wouldn't. Am I betting everything I have that that's gonna happen? No. But in terms of, like, if you like leverage to silver, etc., and you like, high grades, basically a project that, if silver goes down to $30, it's not going to be the end of the world for a project that looks like this high grade. I mean, and you think there's expansion potential. I mean, to me, it's a well-rounded risk-reward bet. Not really, I mean, at this point in time, not really high risk. I mean, they're not going to really shouldn't be able to lose ounces, if you know what I mean, but it looks like it could get bigger. and obviously the bigger it gets, the more it's gonna stand out and all that. Yeah, and lastly, I guess K2 Gold. I just talked with the management team. I mean, they have a really prospective land package. The big news, which everyone's been waiting for. I mean, this is already a discovery. Basically, they have some really good holes. They recently announced that reaches critical federal permitting benchmark with a release of final EIS. So this is in California, and that's been kind of the problem with this project. There's been majors here. I think both Newmont and Rio Tinto has worked here, but it's been difficult for I guess California reasons, kinda. But this is a major checkpoint. So like if we're talking just exploration potential, they have. I mean, it's kind of been stated. I think it was Chris Taylor that said, if people were before today, allowed to really work here, say, if he's just considering the geological potential, he thinks there will be 3 mines here. And now they should be soon able to basically test it for real. And here you can see some of the highlights. I mean, hole 1 here, 18.29 meters, 3.1. Hole 2, 45 meters, 6.68. Starting at surface. And this is the gold trend here. And this is a scale bar. So this is like 4 kilometers. If it starts at surface, etc., and if you have whatever 1 gram plus and some higher grade stuff, I mean, it should be cheap mining, oxidized stuff, and that's just from the gold portion. There's copper and zinc and high grade. I mean, up here there's a bunch of high grade stuff. So the simple proposition, as I see it, is like they already have a discovery. And the gold discovery, with hits like this from the Dragonfly target, and hits like this from the Newmont target. For near surface stuff, this is, I mean, for an open pit, this would be great. And if they flush this out, I mean, how big is this gonna get? I don't know, but it could be multiple million ounces. So I mean, just this gold trend here, obviously has company making potential. But you can imagine, let's say you have 3 million ounces, open pitable with good grades that should be mined a long time ago, in a place like this. I'm talking like oxide, near surface, dry area. What could that be worth? What's gold gonna be at that point in time? What's the MPV gonna be? What's the, They have to drill it to prove that, of course, but that's the bet. I mean, yeah, it's done well. It's at 131 million CAD. And it's like, okay, well, that's, that can look weird because it's a early stage explorer still. But yeah, but in a sense, it's one of the more impressive discoveries that simply got put on pause. Obvious low hanging fruit, just, drill more around where we've already hit some stupendous assay results. And then you get, the rest of the district basically for free. So is there is there margin of safety here? Not really. I mean, they don't have a deposit, but it's like, is this gonna grow? Probably. I mean, what kind of threshold do they need to pull out? Or it's like, what do they need to confirm for this not to look expensive? I mean, obviously, Californian permitting is still probably gonna be one of those caveats to the story. But this is, as far as I understand, this is a very advanced, environmental permitting thing, which can go a long, which should go a long way, and basically suggest that, the the regulators in that area are like they actually they want to see this move forward. So I mean, if there's open pit mines out there, or open pit deposits at 500,000 ounces that show, you know, hundreds of millions of NPV at today's gold price. I think they're after something bigger, but the thing is that this could be a very large gold deposit that starts near surface, and then you get all the other targets for free. And again, going back to, you know, Chris Taylor, that obviously he can't know for sure, but he reckons there, you know, there should be like 3 mines within that project. So from here to 3 mines, let's say from here to 1 big gold mine and 2 other mines, that's a pretty big leap in, you know, market cap. And of course that's years away, but that's the whole thing. I mean, 10 baggers, etc., typically takes you know, 5 years, for example. So yeah, I mean, I just think, yes, it's early stage exploration in a sense, but like you can see how it could become, you know, 5-10 bagger over the next, let's say, 3 years. If they expand the, you know, gold zone, and people are, the market kind of sniffs out that, hey, this is going to be a multi-million ounce gold deposit, should be, I mean, just thanks to the characteristic, if it's near surface oxide, it's like, oh, it should be hugely valuable. And let's say the gold price is $5,000 at the time, or even like today's prices, or even 3,500 or maybe 3,000. That, you know, NPV at least could be multiples of this. Anyway, so yeah, so this is also, K2 is in most HODL folios as well. And again, it's like in a sense, it's done well and all that, but again, if I come back in 2 years, I would not be surprised if it's actually gone up like 200-300% at least. No guarantees, but I think it's absolutely not a you know, super low chance of that happening. Anyway, I'll talk long enough. Gotta wrap it up. Thanks for listening. Consider me biased. I own shares of all companies mentioned. Some are banner sponsors, so twice biased. Or maybe all, no, not all, but most of them are. So twice biased, not investing advice. I might buy or sell any of these stocks at any point in time. So do not buy just trying to, let's say, piggybacking on me. It's like, form a case yourself, see the holding period, you know, if it's got to fit with your personality, your timeline. You might not agree with anything I said about any case, and you don't see the risk reward. You should absolutely not buy it, and absolutely not just take the lazy way out and it's like, okay, I'm gonna buy this, and then hopefully the hedge horseman is gonna tell me when to sell, for example. It's like, that's up to each his her own. You're the one that shapes the destiny of your portfolio. And honestly, my timing is usually pretty bad anyway. That's why I also talk mostly about, you know, if it's more of a long-term case, because I don't know if I'm gonna make money on any one of these stories. I don't, the ones I'm gonna make money on, if I make money on them, I don't know how much I'm gonna make. I don't know how long it's gonna take or anything like that. I just think that I mean, I don't think it's unreasonable to say that, you know, there's a, you know, risk reward, positive risk reward cases for all of these. Anyway, thanks for listening. Bye bye.